Hello there, and welcome to Season 6, Episode 11 of the Bitcoin Takeover podcast. As always, I am Vlad, and my guest today is Joshua Scigala, who is the CEO and founder of Vaultoro, a company which sells gold and Bitcoin. And he has some very specific ideas about what gold is and what kind of role it plays in this whole Bitcoin ecosystem. And he has been in Bitcoin since at least 2011, and he was posting bullish videos on Bitcoin that you can still find on YouTube. So you are part of that old guard who was mainly in Bitcoin because you saw the potential that gold had, but in the digital space. And I suppose you took part in building this whole digital gold narrative for Bitcoin.
Yeah, yeah. It's weird that you brought up the old channel of mine on thing. I found it again like a year ago. Sort of tapped in and went, "Wow, that's crazy!" That I was talking about that stuff and so passionately as well. And you always had haters like, "Yeah." I think you read a comment just before the show, like, "What do you think about falling to $2?" It's just funny reading that stuff nowadays.
So
But
9 years ago, you were doing YouTube videos, and your name was The Alternative Take
yeah, alternative angle.
Angle.
Yeah, alternative angle. Yeah, because it really, back then it was all about trying to bankrupt JP Morgan Chase by buying a heap of silver, like globally, like trying to get a movement going to globally buy a bunch of silver because JP Morgan Chase was so short on silver, like had huge short positions. So we're trying to break the bank by breaking their short positions. It was silly, but yeah, definitely always interested in alternative money or alternative currency economies, actually, in general. Yeah, because I had a swap site back then where people could just swap clothes back and forth and instead of buying and selling. But I realized pretty quickly that it was not a very good way of trading because, I really love your MJ top there, Vlad, but you look through my list of things and you like nothing that I like, and then the deal falls through, which is unfortunate, right? So it'd be really good to have some sort of credit in the middle, that or token or something. That's what made me look back in 2002 for some sort of alternative money system, but it didn't exist, and the cypherpunks were there trying to figure it out, but that double spend problem was unsolvable at the time. And so I thought it was unsolvable as well. Yeah.
So were you also into earlier projects that precede Bitcoin? Like, what's the Liberty Dollar and
Yeah, I mean there was eGold, Liberty Dollar, Liberty Reserve. There was a few, but there was also what was it? There was one guy. Uh, he he was one of the co-authors of The Game, which is like a dating book. And he also created an alternative like ledger system. I've forgotten what it was called. It was so long ago. And he's still doing stuff in Bitcoin. I forgot his name. But yeah, I was always keeping an ear to the railroad track in a sense, where because I had this swap site and I really wanted to figure out how to have a credit in there, but I didn't want to create the credit because then I just become the central bank again and I could print as much as I want by putting more digits into the database. And also didn't know what sort of effect that would have if I start making my own money and peg it to the dollar, the Australian dollar at the time I was in Australia. Then I could be seen as potentially forging money, or because I would just put in amounts of money and peg it to the dollar that would sort of not work. And then I was thinking, well, you can make them credits, and the credits are just worth something, but you have to pay. So it really opens a rabbit hole that you don't want to go down. So then I started looking at, well, there must be some sort of system that's not centralized, and of course there wasn't. Although the cypherpunks were working on it, it never really. It just was too early, and a lot of these concepts were thought about, like credit systems, but to be able to print those into existence in a decentralized fashion is really kind of a step that you have to take in terms of inventing something totally different than what we had. And gold is a really good example, because gold you find into existence. You don't print it into existence. So you have to put some work in and find this stuff. And then as soon as you've found it, then it starts circulating. And it's very different to fiat money, of course, where you just print it out of nowhere as debt, lend it out into existence. So you lend it and then ask for more interest than exists in the system. And so this is one of the unfortunate things of the fiat system, is it's just it's printed into existence with debt that doesn't exist. With interest that doesn't exist yet. And so there's always less money. It's kind of like a huge musical chairs with not enough chairs to sit down on when the music stops, kind of thing. There's more interest owing than money existing.
So in 2011, in your video, that I suppose I should put in the description or something because it's very interesting. You mentioned that you already own gold and silver, and you're no longer interested too much in them, but you're much more interested in seeing how far Bitcoin can make it. So by 2011, you already had an interest in gold. And how did you acquire this interest?
Really, it was 9/11. When those planes went into the towers, I straight away was thinking, oh shit, first of all, what's going to happen? How's America going to react? And I went into sort of lockdown, kind of went up to the Blue Mountains in Sydney and just sort of, hid away from the cities, because I thought, what if America reacts and then China reacts to that? And there's sort of a knock-on effect. So I was like, what's going to happen? And then the second thought after that was, how did this happen? It can't be just some dude in a cave. Where there's got to be more to this story. So of course it's like follow the money. That's the old police thing, right? Is you follow the money. Who paid for all this? Where did the money come from? Where's the angle on this? And hence the name being alternative angle. Is looking at the alternative angle, and that got me, of course, down the rabbit hole of central banking, the Creatures of Jekyll Island, which is an amazing book. It's a huge book, but it goes into the history of the Federal Reserve System, and you start seeing the global corruption of the Federal Reserve System, and that it's inherently corrupt, it's inherently broken, it's an inherently mathematically wrong way of doing money or currency. And so then I started thinking, this is I just want out. I want out of this system, because the more we're in it, if I work my entire life saving something that can be printed out of just thin air and basically print my savings away, then I want something else. So I started jumping into gold and silver and trying to use that as currency. But trying to use gold, you could even go to a gold and silver event and try to pay in gold and silver. It's impossible. It's super hard, and it's an annoying thing to do. And so I really saw Bitcoin when eventually I came across the Bitcoin white paper, which was like late 2010. I looked at it and went, she's cracked it. This anonymous person has cracked the big the big thing that everyone's been trying to do in this small niche of people that were trying to do this. And I thought, this is the first digital scarce thing that exists. Everything else can be copied. You can have an MP3 and make a copy of it and give you one. This is the first digital thing that I can't make a copy of. I can just send it on, and so that really drove me crazy, because I thought this is it. And so I started putting that. I put that into SwapStyle, which was the swap site we had at the time. It was probably one of the first services to incorporate Bitcoin, actually. You could buy like alpaca socks and stuff and a few other things, but really it was just sort of people sending it to each other. Yeah, I don't know what I was going on. I sort of lost the train of thought there.
Yeah, so you started from the idea of how you discovered gold and how you got interested in acquiring gold amounts. And then you described something which is very interesting because most people with whom I speak and they got into Bitcoin very early on, it was mostly the Silk Road or some sort of article in mainstream media about Bitcoin, more specifically about Silk Road most of the times because
Yeah.
that was the killer app at the time.
Yeah, it was. Yeah. Yeah. I mean, the Silk Road came a little bit later for me, but it was definitely the first major use case. And what the Dread Pirate Robert's philosophy was always non-violence, the NAP, the non-aggression principle. And I was well down the road of looking through a philosophically sound reason, a way of running society from first principles of no aggression. So how do you run a society without without the initiation of the use of force? And when Dread Pirate Roberts brought the Silk Road out, it was a very interesting use case for me because I mean I didn't take drugs or anything like that, so I never used it, but philosophically I resonated a lot with it. And he used to write nice big long passages about the non-aggression principle and the freedom for two consenting adults to choose what they want to do with their own bodies. And yeah, so a lot of the reason why a lot of people in the era when I was in Bitcoin were in Bitcoin was because of the sort of extreme passion for freedom and also this kind of sci-fi future of a stateless society that would be run through market forces and incentive structures instead of punishment structures. So and Bitcoin was a really nice way of illustrating that, because Bitcoin works with incentive structures rather than punishment structures most of the time, most of it. So, you know, the miners, all the game theory that's put into Bitcoin is based around incentives, not to be bad actors rather than punishment if you are a bad actor, even though there is still some punishment in there, but you really have to be a terrible actor to be punished. Yeah.
So I have a very specific question on which I'm not sure that you have to answer very often, but I remember a Twitter exchange that we had at some point, and you mentioned that in 2015 during that panel with Michelle Seven and also Nick Szabo and Craig Wright when he was introduced for the first time to the Bitcoin community, you said you were supposed to be on that panel.
Yeah, that was really weird. Michelle reached out to me like a couple of months before and said, "Hey, you want to be on this panel?" And I just something came up and I couldn't fly there, and so I said no. And then afterwards, when Craig Wright came out, and I was like, "Who's this weird, strange guy on the back of the screen?" And you know, and then all the controversy and nonsense behind that guy. So I was kind of glad it didn't. I didn't go, but it was weird. Yeah, it was weird that was like this big turning point. That one panel was this big turning point in the search for Satoshi, which it didn't end up being the turning point at all, depending on which side of the fence you sit on there. But really weird. Weird. That whole story is really weird. I mean, that's the thing about Bitcoin, though, is that there are so many strange things happening. It's like reading an epic sci-fi novel, and every chapter there's some new drama that comes up, and it's quite phenomenal, right? I mean, as you know, there's always something amazing, and if it's not in Bitcoin, it's in one of the other coins. You know, like when the DAO happened, like that for me was so amazing when the original DAO of Ethereum broke. Got hacked, and the hacker had like 30 days where the money was trapped in a smart contract, and they had to figure out in 30 days what to do. All of this sort of stuff is like this epic sort of epic dramas. It's stunning. What a great great time to be alive to witness all of this stuff.
Yeah, and it's also interesting to see how even people who are into Bitcoin and they own large amounts don't seem to get it. Like when there was that Binance hack and their CEO was like, how about we do a reorg of the blocks so we recover the money?
Yeah. Yeah. That's astounding. For me, that's really, really astounding is that still happens. And, I mean, I can kind of understand it in very early projects, like a project that's been around 6 months and they're trying to iron stuff out. But if you're being taken serious, like Bitcoin's been around now, nearly 11 years or 11 years now, I don't know.
12.
But 12 now, yeah. So it's like, you just can't do that anymore with a solid project. It's just not you would never be taken seriously. It would lose all value. I mean, a lot of value. Of course, there's always people that are going to buy it. But Bitcoin has this wonderful thing about it, though, is that it was the very first cryptocurrency, and so it'll always have that collector's value. Even if something does happen like that, there's still going to be people that are wanting to buy and have a piece of the very first cryptocurrency.
That's also a discussion that I have with people who say, what about Satoshi sells his coins? Because there's already a market and there's a demand. So if that happens tomorrow, I suppose there will be a price drop in the beginning, but then people will start buying in and it will not make much of a difference.
Yeah, no, absolutely. Absolutely. So many people are sitting on the sidelines ready to buy in. And if Satoshi sold all his coins, they'll all be just jumping for joy. Yeah.
And this is when you realize that the project has really matured, when it has enough market demand to cover all of these dips that happen unexpectedly for whatever reason.
Yeah, absolutely. I mean, a lot of the skeptical bankers and such and big companies that are now buying in, a lot of them realize that it's something to take a closer look at when it went from, Mount Gox height of like 1,200 down to whatever it was, 100 again, or 200 or whatever it went down to, and then it went back up and then they went, oh, okay, so this thing, I think that was probably the fourth or something major cycle, boom bust cycle. And when it went back up, that's when people start realizing, okay, this isn't something that's going to zero unless, some massive fundamental flaw. But, it's been so long and that's why core developers don't want to change it too much, is because it really has stood the test of time so far. So and it's these sort of cycles when it starts going back up and sitting around a certain price, that price discovery is still happening, really shows that the project has value and it's not going below a certain value point.
My main point of concern right now is that if we get something like a Bitcoin ETF and we subject Bitcoin price discovery to this fiat process, which involves trading of futures and of assets that they are not backed by real Bitcoins. That's what I'm trying to say, that they can trade Bitcoins that are not created by proof of work, but by their fiat financial means. And if they have a say in the market price, something like the phenomenon that we have seen in March or April when oil went to zero can also happen in Bitcoin, even if the hodlers don't sell their coins. The manipulation of markets can still lead to that if we allow them to, over financialize Bitcoin.
Yeah, I mean, the thing is with the oil example, oil, believe it or not, is extremely hard just to turn off. Like it's expensive to turn off the rig that's happening, that's pumping out all the oil. So a lot of oil manufacturers were selling or were giving money to people to take the oil off of their hands because they were just running out of space and it's too expensive to turn off the pumps. So I don't know if that would happen in Bitcoin, I don't think we'd ever go to negative when people are paying you to take their Bitcoin. But yeah, these black swan events could definitely happen in the marketplace, especially when you have these ridiculous derivatives markets, which have, and you get people like institutions like the Garter that basically are investigating that this has happened to silver for a very long time. This is what the whole crash JP Morgan by buying silver stuff, to come back around to that, was all about. That is that they felt like this naked short selling, or this naked shorting on certain asset classes, was basically crushing the price of it. And they could do that without anything. So what a naked short is, for those that don't know, is that you can go short on a stock. And what going short is let's say Bitcoin is you borrow Bitcoin, for the listeners at home, you borrow Bitcoin of someone else and you sell it right then and there. And then you buy it back when the price has gone down. And then you pay back the person you borrowed and keep the difference, right? Because you bought it for cheaper than you sold it. So that's how you make money on the way down. The thing that JP Morgan and some of these large banks have, they have the privilege of shorting something, of borrowing something that they don't actually borrow. So selling something that they're not even borrowing. So there's naked, they're not even borrowing off. So there's no demand. There's no demand of anything. And I think this was the guy from Overstock. I've forgotten his name. But he took Wall Street to court, like certain major banks to court, because they were crushing some of his businesses like that. And it was a great way for competitors to basically crush a competitor, like large players to crush competitors by basically getting the banks to naked short sell them to death. And so this whole thing has been happening in the silver market, some say, but it's done so sort of, with all these strange instruments, that it's very hard to find. But it's been keeping the price of silver artificially low. And I feel that this could actually happen to Bitcoin too. The thing with Bitcoin is there is so few of them. I mean, it's 21 million whole units, and less than that because a lot have been lost, and a lot are locked up. So the actual liquidity that's available is a lot lower. So if they were to crush that price artificially by naked short selling it constantly, I don't think they can keep it down, because you would have this separation that happens from the price of the paper markets to the physical markets. And we saw actually that during Corona time with gold and silver, where the paper markets, the spot price of gold was staying fairly, it wasn't really moving. And the physical, if you tried to buy physical on the street, it was you're paying a huge premium on top of the spot to get the actual gold. So you had this actual separation happen between the markets, and this could most likely happen, which only causes the problem. The real problem is that people lose. They lose respect for the paper markets. They lose, they just see it as some nonsense market. Kind of like the price of the the Venezuelan currency on the street compared to what the government is saying it's worth. The bolivar's worth, according to the government, this price, but on the street it's like the real price and the real market price, and that could happen.
Do you tend to side with the cypherpunk side of Bitcoin, which says that it should be a financial asset of the internet and should be independent from all the financial institutions? Or do you think that Bitcoin needs some sort of legitimization from financial institutions, and we actually need people like the CEO of I don't remember his name. I'm really sorry. MicroStrategy, yeah.
Something like that, yeah.
Yeah. So do we need that, or should it be like a grassroots cypherpunk project? What's your take on Bitcoin?
I don't think we need any of the financial institutions. In fact, this was one of the reasons I started Vaultoro, was because I wanted to price Bitcoin in something else, something real, in grams of gold rather than rather than fiat. So I wanted to start seeing Bitcoin priced in gold and silver, even in pork bellies or bushels of wheat, real assets. And hopefully, if you to get big enough to actually become the price discovery mechanism instead of the fiat nonsense. But the problem is the fiat is just they've just got so much of it, they can just keep buying it up, and there's just a much bigger market.
I'm obviously not very much acquainted with the price of gold, but when you put together Bitcoin and gold and you compare their prices and you have a ratio, what does it look like?
It's really interesting, because a lot of the time you think, oh, it's going up like crazy, and then gold's kind of moving a little bit up as well, and so the volatility isn't as much. Of course, it's still a lot. But it's not as much as the fiat markets. And what I found really fascinating by running this marketplace for so long, since 2015, is that it was in 2017, we were selling more gold than the largest gold retailer that we were buying the gold from to supply to the market could supply us. In 2017, we had to get, like, they really struggled. I never thought I'd get to that place. It was funny, because when we first brokered the deal with them in 2015, they said, yeah, but what if you guys get too big for us to handle? And I sort of laughed. and that ended up happening. So what I find interesting about that is that Vaultoro was the Vaultoro traders are what I find to be a little bit more clued into the macroeconomic philosophy, or they're a little bit more switched on than the average day traders who just look at the prices. So they were looking more at fundamentals, and so I think it was a really good pointer as to, hey, we're reaching the top of a bubble here, because in 2017 we sold so much gold because people were, the smart money, to bring that term up, was jumping into gold. And, over the last year, they've been jumping back into Bitcoin with that gold. So what I wanted to say with that is that the ratio, I think, is a good pointer. It's definitely something that traders out there should keep an eye on, because it kind of gives a pointer to the tops, because the traders that are trading this pair seem to focus more on the fundamentals than just the day trading stuff.
Yeah, I suppose that in 2017 it was not this obvious or intuitive to buy gold with your Bitcoins after you saw the price go to 20K. But now, after we have seen the money printer go burr and we have seen what the Fed can do with inflation, I suppose it makes a lot more sense, since gold seems to retain its value much better around longer periods of time.
Yeah, I mean, the thing is, when you trade your Bitcoin back to fiat, you have two counterparty risks. You have the counterparty risk of the exchange going broke or not managing the funds properly or getting hacked or anything like that, right? But you've also got the risk of the bank that the exchange uses going broke or dying, or there's a global banking crisis or whatever. So you have two counterparty risks. And this is why I wanted to build an exchange. Actually, why I came up with Vaultoro was after the Mt. Gox collapse, which was the first major exchange, for the viewers that don't know. And when that collapsed, even the people that had fiat on that exchange lost it to the liquidators that were coming in, and just all the lawyers. They're still waiting for it. I'm still waiting for stuff from Gox. Like, it's not, so what I wanted to get to was a point where people could trade into a physical asset that's allocated to their name as their legal property, off of the books of the exchange, not like totally bank independent, audited and insured. That's the other thing. The banks are only insured to like 100K. Some countries up to 250K is the most. But So if and that sounds like a lot, but it's not a lot to an exchange that holds millions and millions of dollars. And then, you've lost millions and millions of dollars because the bank went broke. Oh, here's 250K. It's like, how are we going to pay all our creditors with that? You can't. So the good thing with gold is because it's a physical good, it's a physical thing. Insurance companies are willing to insure the whole lot, and if and it's secured in the client's name as their legal property off of our books. It means that if we don't run our business properly and go broke, it doesn't matter because our clients' assets aren't on our books. It's nothing to do with the business. Once that gold's sold, it's in the client's name, sitting in a vault, and it can't be resold or anything. It's just a chunk of metal. It's not some weird financial instrument. It's just something easy to understand and grasp.
Yeah, and you mentioned a counterparty risk on exchanges, and I want to touch on this topic of proof of reserves.
Yeah.
Because there is only one exchange in existence that has ever done a proof of reserves, and that was like 5 or 6 years ago, and it's Kraken. And we like to think that in this space where everything is with fixed supplies and deflationary, not everything, but Bitcoin is. We like to think that they actually hold the coins that get deposited, but they can also do stuff with them of which we don't know. And we are not entirely sure if everyone decides to withdraw their coins from the exchanges that we can actually get them.
Yeah.
And I was about to ask, does Vaultoro have any sort of proof of reserves with the gold that is held in your vaults?
Yeah. I mean, we were the first exchange before even Kraken. Like Kraken had, they implemented the proof of reserve that Gregory Maxwell and Peter Todd came up with, which was a really clever way of using Merkle trees to mathematically prove that all Bitcoin are there. The thing was, it's not very grammar friendly. Like you go in there and you click calculate and it gives a green tick and you're like, oh, well, how did it come up with that? And then you'd have to like run your own. It's not very grammar friendly. So I really wanted to come up with a way that has a proof of reserves that, some, half-wit, anyone could read and go, okay, I get it. So what we came up with was the Glassbooks protocol. And how that works is that every user gets an anonymous ID. So you log into your settings and you see a string of numbers and letters, and only you and we know that because we gave it to you. You then log out of the system, so we don't know that you're checking. You could be checking at any time, and we publish every single anonymous ID with the amount of gold and the amount of Bitcoin that anonymous ID has. And because we don't know you're checking, we have to have the right amount there. Then you can sum up everybody's holdings and check that against the cold wallet addresses that are published. And we had a warm wallet, which was equivalent to the to all the hot wallets, because there's just too many hot wallets to show. And they're just getting generated all the time. So we had a warm wallet, which was the equivalent of everyone's holdings. But of course, we outgrew that. We couldn't keep up with that. So what we decided to do was just show the cold wallets and show that it's at least 20% of all the coins that are there. And with the gold, we show the vaulting facility statements, the auditing certificates from BDO International, which is one of the largest auditing firms in the world, and the insurance paperwork. And compare that to the sum of everybody's holding, you can see that matches up and is at reserve or above reserve. And this we really want to take to the next level. And I'm always trying to think of better ways to make that better. One other thing is with an RSS feed, so you could subscribe to the list of anonymous IDs, so you can always keep, and write programmatically alarms if it goes below or whatever. Another thing we're looking at is hardware modules to put underneath the pallets of gold that would somehow inject into the blockchain every time there's a change in like air pressure or temperature or weight. But this is a little way down the line. But these are the sorts of things I'm thinking about. The thing is, we just upgraded to Vaultoro 2.0 a little while back, and the Glassbooks protocol we're just going to put back into the system now as we switched over. We rewrote Vaultoro from the ground up, because when we wrote Vaultoro, we had one single pair, Bitcoin and gold, and because all the altcoins were just some sort of laughable joke thing, weren't really taken seriously. There was Litecoin and Ripple. That was about it. Now, of course, there's a lot of very, very interesting projects. Well, not a lot, but there's a few. And there's a shed load of strange casino coins that are out there. And people have them and they want to trade something physical for them. So we wanted to have more pairs as an exchange. And so we ended up having to rewrite Vaultoro from the ground up, and we've finished that now. We're still tweaking a few little things, but the transparency protocol we're about to relaunch. So I'm really happy about that, because that was kind of my big thing. Like after Mt. Gox collapsed, I thought, how can we make an exchange that's truly transparent? Because the first thought was, when Mt. Gox collapsed, was I sat down with my brother and said, right, I'm sick of this. I'm so sick of it. Every single time, like we had Insta Wallet and all these different exchanges and wallets, online wallets, just running off with people's money, and or going, trying to hide losses. And I said, we've got to create a decentralized exchange. So we're sitting there trying to figure out the decentralized exchange with with actually the same system that BISC now has. It was like a mutually assured destruction sort of mechanisms, where you put up more collateral into a smart contract, into a multi-sig, than you were wanting to trade, and then the other party could destroy that if they don't get it, stuff like that. But the op return codes, the programming language in Bitcoin didn't really have enough scope at the time for us to write that. So we thought, well, it's gold anyway. We're going to focus on gold. That's centralized. It's sitting in a vault. It needs to be centralized because of insurance and auditing. So let's focus on transparency instead. And so that's where we came up with the Glassbooks protocol, which was what I explained before. And so I really was always very proud of that. And I want banks, I want other crypto exchanges to be that transparent. First of all, I don't want people to hold too much coins on exchanges. But second of all, if they have got exchanges, then those exchanges, they should demand total transparency, absolute transparency. And if we don't as users demand this sort of transparency, we're going to get the state coming in with pathetic regulations that they don't even understand themselves, and pretty much destroy exchanges and give all that power back to banks, and we'll end up trading crypto on banks. And I don't want that. I want the new guard, the cypherpunk movement, to deliver what we want, and that's code, law through code, and having structure, having code that stops people getting ripped off.
Well, that would be a bummer, right? Because in some countries, you can already see that they passed laws that allow banks to be custodians of your Bitcoins. So It's going to be interesting to see how it plays out. And I suppose that banks have enough money to lobby to governments and explain why they are the best of custodians and why exchanges should be shut down and regulated until they die out.
Yeah.
So it's not improbable that this could happen.
Yeah, and I'm waiting for the first big banks to get hacked, because banks actually get hacked all the time. They just don't talk about it. Banks have been constantly hacked since the 80s, or even probably earlier, and it's always brushed under. The thing is, with Bitcoin, you can't brush it under. You can see it on the blockchain. Or where the hell has all that money just gone? Someone just moved X amount of Bitcoin from somewhere, and someone raises flags. So, it's funny to hear all these regulators saying everyone needs to be more regulated, and you think, well, look, you guys don't even know what you're doing. How can you? you say you want more regulations and really believe that that is going to fix stuff? I'm a big fan of rules. I'm a big fan of having solid rules, but you need to have rules that make sense, and you need rules that are mathematically ensured and incentivized to not be broken. And this is what. So I'm talking things like multi-sig, for instance, that exchanges have proper multi-sig in place. And for instance, the gold industry in Britain, where we're registered, is voluntarily regulated. And what does that mean? Well, that means that there's a bunch of good rules that have been set up by the industry to say these are good best practices. Because I tell you what, if you think the Bitcoin and the crypto space is full of scams, the gold industry is 3,000 years of gold scams. There's a lot of scams in gold. So there's best practices to have, and those best practices are really solid. They really make sense. As a user, I want my exchange to follow that. So by having voluntary regulations, you can put the stamp on there and say, I follow these regulations. And every user should demand that what they buy is followed by those regulations. For instance, in the gold industries, the LBMA, the London Bullion Market Association, a bunch of regulations. So they're voluntarily enforced. No, they're not enforced. They're voluntarily adhered to. And a lot of people, anyone that's serious, isn't going to buy something that's not LBMA approved. So this is something that needs to happen in the crypto space a lot more. We need to have. Andreas Antonopoulos and a few others actually built some wrote some very, very good regulations in terms of security protocols, standards for crypto and Bitcoin in general, and trying to get a standard based upon that. And that's really solid, and I love that sort of work. And I really take my hat off to people trying to build better mathematical solutions and voluntary regulations around this space.
It's always interesting to see that most of the times it's the players who are at the top who demand for most regulations, and they want them to be the strictest and the hardest. And what they're actually aiming to do is to close down the gates and not allow new players to get into the game and establish themselves as oligopolies that are protected by the government. And they know that even if the regulations are very harsh and strict, they still have enough money to pay lawyers to bypass them and lobby to politicians and possibly buy politicians so that they're, invulnerable to these threats.
Yeah. And it's funny because the banks have done it so hard. They've built these huge moats and walls around their industry that startups can't compete. But they've built them so big now that when Bitcoin came along, they had fortified themselves in so they couldn't be part of that in the beginning. They couldn't be part of it because it just destroyed, their regulations that they built around themselves didn't allow them to. So in a way, it was kind of funny seeing, or ironic, seeing banks locking themselves in with huge moats and walls around their industry, and not be able to compete. And this is generally what happens. These black swan events come up where someone's like invents this new digital asset class, and they didn't even know how to get around or how to utilize it. And so what they did is just laugh it off as some joke, which is nowadays not so funny anymore. Yeah, but it's a really, really good point, Vlad, is that regulations are generally there to protect people of their own industry, and anyone that thinks it isn't, because I hear it all the time, and I go to places all the time that say, like, actually, to back it up a bit, I was at a conference once and I asked the question to the audience, who thinks there should be more regulation in Bitcoin? And seriously, 95% of the people put up their hand. And then I said, well, guess what? The banking industry is so regulated. It is really regulated. There's massive amounts of paperwork. It's up to the eyeballs every weekend. Bankers are working to fill regulations. First of all, regulators do not have the capacity to deal with that much data. Like, there is so much data going in to these regulators. It's insane. There's no way that a regulator could point out something that's happening wrong and go to the bank. So the only thing they can do is, if something goes wrong, then they can go through the data and figure out where it went wrong and find them and stuff. But second of all, the funny thing is, when I said, and 95% of the people put their hand up, I said, well, I think it was HSBC or one of these big banks had just been fined the day before, like $1 billion or something, for letting like drug cartels launder all their money through them. I can't remember which bank it was, but and it was all over the news that day. So it was funny because I said, well, open up your app, have a look at the news. The banks have been regulated to hell and they're still laundering money for everyone. So how's that even working? The regulations aren't working. You can only really regulate by educating the consumer, because the consumer has been so protected from risk for so many years that they're falling for any old scam. So first of all, we need to educate people into what a scam looks like, because people have forgotten. And second of all, put in proper regulations based around math that can't be broken, because it's mathematically assured.
It's funny that you mentioned this, because most politicians are only for regulations that they can adjust in time, and they are subjective, and they can humanly intervene to change them at some point in the future. And also, in regards to your point about HSBC and some other banks that laundered money, we had this big scandal just a couple of weeks ago with Deutsche Bank provably having laundered money of drug cartels and international criminal organizations. And what happened after that? They have such a great PR and marketing system going on, and they have so many people working for them that I didn't see any backlash. But if something happened to Bitcoin and we had like Silk Road 2.0 getting shut down, I suppose we would have seen articles getting published for like a month, just taking jabs at Bitcoin and explaining why it should be shut down, why it's terrible, why it was a bad idea that it was allowed to run for such a long time.
Yeah.
I don't know. The system is kind of rigged against something that maybe that it's natural that it doesn't have any sort of marketing or PR department or a centralized system of promoting a narrative. And by the way, I'm happy that the Bitcoin Foundation has failed, because otherwise, I suppose that every protocol change would have been much more dictatorial and much more akin what Gavin Andresen wanted to do. But journalists are not what they used to be anyway. They don't do any research. It's all about publishing first and getting most clicks.
Yeah. No, it's right. I worked at a television network, multiple television networks for a long time, and really, it's journalism is just it's too expensive now to do real investigative journalism. It's too expensive, especially with like 24-hour news networks that just need content. It's much cheaper just to stick some person in the White House or in the Parliament and just have them repeat what the politicians tell them to repeat. But yeah, the thing is with Bitcoin, the funny thing is the Silk Road and the drug stuff was always this thing, this monkey on the back of Bitcoin, and it was always pointed to like, the drugs, think of the kids. And so it's happened so much, and we've got Silk Road 2.0, 3.0, 5.0, where you're probably Silk Road 1000.0 now. They just keep popping up and being shut down or disappearing with everyone's money. So that doesn't really be talked about anymore. because people kind of desensitize. It sort of belongs to Bitcoin. Oh, you can use it for, like ransomware or whatever else. It's kind of used to it. Those articles have lost their power. Where I think the next major punishing power will come from is some terrorist organization does something and it comes out that they were using Bitcoin to fund their operation. And when that comes out, I think that will again be that news article you were talking about where they're like, how did you let Bitcoin get this far? We need to regulate it more. We need to know exactly who's got what and where and why. And that's when you'll see it. The thing is, just how Bitcoin has lost the power of saying drugs are bad and drugs, Bitcoin, and because it's happened so often that people are it's lost its power. Fiat has had that with war and lost the power too. No one ever asks when there's some major conflict, well, how all these strange farmers got like massive rocket launchers and Humvees and like, where are they getting the money for this hardware, or where are they getting the hardware from? No one even talks about, well, where they're getting their money from anymore, because it's sort of like it's lost its power over the years. But Bitcoin hasn't had that yet. That's how little it's used, really, in the big scheme of things. No one's really. We haven't had a major terrorist organization like fund itself through like buying and selling of their ebooks or whatever for Bitcoin. That will come. But the funny thing is, fiat has had that for so long, and we're going to have to do the same thing that we did with drugs and say, look, fiat is used in the drug market way more than Bitcoin. You might have it in some niche technocratic zone where people can buy and sell drugs for crypto. But come on, fiat is just like orders of magnitude wider in the drug business, all the way from planting the seed, the poppy seed, through the manufacturing process, through the shipping process, through the delivery process, all the way to rolling that node up and snorting it up your nose process. Like fiat's in the entire supply chain. So, and it's been the Bitcoiners that have constantly slammed that sort of backhand in the tennis match of crypto is going to be used for illegal stuff. To say, well, look, fiat's being used for illegal stuff too. Good money is good money. And, just like bank robbers also wear shoes, it's something that everyone wears. Everyone also uses money. It just depends if you're a bad person or a good person.
Yeah, I was just checking the SegWit adoption table that's posted on the Bitcoin wiki.
Yeah.
And I was looking up for Vaultoro's take on it. And you actually considered that SegWit itself was the most acceptable method to scale Bitcoin, which is interesting. Well, because you have been, I guess, in the space for 10 years now. And at the time you had been for 7. And there were lots of ideas to increase the block size. And I think Jeff Garzik was the first one in like 2011 or 2012 with his 7 megabyte Bitcoin. But it's interesting to see that you are on the good side of history, essentially.
Well, I flip-flopped a little bit on that. In that I did think that keeping a smaller block is better. And I was adamant that we could find better solutions before we raised the block size. And the thing was that when we were in that sort of stalemate where no one was pushing, it was just fighting and fighting and fighting and fighting and fighting, and no one was budging, I did sign the 2x because it was like, look, we lift it by double and we get SegWit, then everyone's happy. It's not the biggest damage, but let's come to a compromise and do that. The thing was that then got signed, and then Bitcoin Cash forked off before the SegWit 2x happened. So then I went back to everyone else that signed and said, we don't need this anymore. This is now null and void because the big blockers have got their chain. people that wanted big blocks. And I think it's fair enough. Try out big blocks. This is the whole point of Satoshi's mechanism of forking, is that, hey, we can try big blocks. Let's try it out. And we, everyone that has coins on this chain also has coins on that chain. So let's try it out. What I don't appreciate is when people say that's the original Bitcoin and that's, and try to fool people into buying the wrong chain. I think that's really, really detrimental to the entire ecosystem. You should definitely say, well, we forked off and tried this. I think, obviously we have big hurdles ahead of us. Vaultoro is, we've sponsored every one of the hackathons, the Lightning Network hackathons. And, I'm really bullish on the Lightning Network. It is an amazing thing. Anyone that hasn't downloaded a Lightning wallet yet, it's free. Go do it. Open up a channel and try it out. Blue Wallet's great. I don't know. There's no sponsorship here or anything like that. Zap's great. Blue Wallet, I really like. I think Zap has it as well, but there's some services in there like Roulette and some other things which are interesting because it's all Lightning. So you can have a go at like how quick this is. And there's nothing cooler than sending confirmed transactions that are already confirmed. They're already solidly injected into the blockchain history. And you can send these coins around so quickly and so fast and so beautifully. It really reminds me of the old days when you were sending money around for nothing and it was getting to people's phones and oh wow, that same feeling, So definitely do yourself a favor, try it out before you bag it. I think that a lot of the trouble that the Lightning Network has had is because there's so much competition now in chains that they're all trying to on chain's better, and then you get this armies of people slagging something that they don't even try out or anything purely because they're invested in another chain. So definitely do yourself a favor and try out the Lightning Network, and we need to as an industry really accept it. Vaultoro was actually the first exchange to implement the Lightning Network, which I was really proud about. This was 2 years ago and was really difficult. It was very reckless, hashtag. We haven't re-implemented it yet on Vaultoro 2.0, but we're definitely very, very close to doing that as well. So that's exciting.
If I recall correctly, last year you also added support for RGB tokens, which are built on top of layer 2. So it's on top of Lightning. Some say it's like layer 3. And it's interesting.
Yeah, like RGB I found really fascinating. We didn't implement it yet, but we're putting some R&D towards it because we are still interested in tokenizing the gold. We think it's I've been sort of struggling with the whole notion of tokenization of gold because there are a lot of hard things to do. A lot of people have tokenized gold, but I feel they've all done it wrong because you need to pay for the fee. You need to pay the people with guns standing outside. You need to pay vaults. You need to pay insurance companies and auditors. So and a lot of these coins are just like, this is equals 1 gram, and you're like, okay. Who's paying for all the the guards and the big metal doors and the how are you getting that? And what happens if that gets lost? And there's a lot of problems with tokenizing things in the physical space, and that doesn't just go for gold; it goes for real estate and all the other crap that people are trying to tokenize. So, but saying that, I think RGB is really interesting, or tokenization in general. It's just there's issues with trying to solve how to, and I'm glad that people never gave up on the double spend problem because it seemed unsolvable, and that was why we didn't have Bitcoin earlier. But all of a sudden, Satoshi had the solution there. So, by me saying, there's issues with tokenizing real world assets. I just think people need to continue thinking of how to do it, because I do think it's useful to have permissionless ways of people trading ownership certificates of a physical good in a digital way.
I started this interview promising that we would talk about Bitcoin and gold, but we ended up getting into quite technical Bitcoin specific aspects. So let's get to the Grayscale campaign that was launched, I think, last year or a
Yeah.
couple of years ago. It's very hard in Bitcoin to keep track of time because
Yeah,
there's
I
so
know.
much going on. But
Yeah.
they said in their campaign that investors should hashtag drop gold and
Yeah.
replace it with Bitcoin. And what is your stance on this? Do you think that gold and Bitcoin are complementary, or is there some sort of competition going on between them?
I mean, I like Barry. He's a great guy and all, and Peter Schiff as well. I like him as well. But both of them used this conflict as a way to promote themselves, and it's a silly conflict. Rare assets are an important thing. Like if people still go, well, they did before COVID. They still went to the cinema, even though they had 4K TVs at home. You know, there's a weird comparison, but rare assets are the things that are fighting infinite fiat, and it should really be drop fiat. Drop fiat. There are so many people holding their life savings in fiat, and it's just silly for gold and Bitcoin to be fighting when they work so beautifully together. They have, Bitcoin is a mathematical model of gold in a way. We have they're mined into existence, like I was saying earlier. They're found into existence and
I'm
spent.
really sorry I have to interrupt you, but I got called by the delivery guy and I have to go pick up something downstairs.
All right,
So I'm home
I can
alone.
keep on
There's no
talking.
way. Yeah, so I'm really sorry. This is unprofessional, but
No worries. You go
I
pick
don't
it
know
up.
what to do.
I'll continue on my rant of why
Okay,
gold.
so it only takes like 5 minutes.
All right, you do it, Vlad.
I'll be back.
Do it. Yeah. So what I always think is gold is gold is very similar to Bitcoin in a way that that Bitcoin is mined into existence, but at the same at the same time, Bitcoin is extremely fast to move digitally. It's native to the internet, whereas gold isn't. It's very hard to verify gold. Bitcoin is very easy to verify. It's Gold is divisible theoretically down to its atomic level because it's a base metal, so it's gold all the way down. And so that's very similar to Bitcoin, where it's down to the Satoshi, and even more on the Lightning Network, you can go to sub-Satoshis. But the problem is when you have these two things that are very similar but very different, gold is quite stable compared to Bitcoin, which is very unstable. Gold is extremely old, 3,000, 4,000 years of being treasured as a store of value globally, independently of different countries, very decentralized in its mining. So they're very similar and very different. But when they work together, I think, when you put them together, I think it's a really great solution to the entire fiat corrupt structure that we all have to deal with. So this is, why I really love having two rare assets to trade against each other rather than going back to fiat all the time. And I'd like to get it to a point where we're actually pricing Bitcoin in grams of gold rather than, USD or something crap that's, its value is really sort of, it's so sort of made out of thin air. I mean, there is market comparisons and there is a price discovery system, but it's a strange one because the more fiat that's printed, it's the people that first get their hands on newly, freshly printed fiat that get to keep the entire value of that fiat and spend that value, and that's usually people that are close to or comfortable in the corridors of power. They have the full purchasing power of that newly minted coin, and it's the working class, it's the normal people that eventually that fiat trickles down to, and by the time it does, it's lost a lot of its value. And so yeah, by just getting rid of that entire system and starting to accept Bitcoin, and if you accept Bitcoin as a business, trade it. If you need that stability, trade it into gold, trade it into something solid, and then trade it back to Bitcoin when you need to spend it again. Yeah, I think that's always sort of for me a better solution as someone that resonates a lot with the cypherpunk mentality. But I also do like some of the programmatic stablecoins that are happening, like Maker. It's all very, very interesting. Although Maker's so young, black swan events or the depegging could happen. It's already happening a little bit where it's not solidly pegged. So I'm a big fan of metal. It's something I understand. It's just easy to understand, and that's why Bitcoin and gold is an interesting take. Yeah, I wonder if there is some comments here on the video. I'll see if I can find the live video. By the way, guys, please like and comment on the video. It really helps Vlad's amazing channel here to grow. So chuck a like right now. Do it. We'd love it if he gets back and he's got like, a bunch of likes. That would be great. Let's see here on the live stream, see if we can get some comments. If you've got any questions out there. Oh, here we go. No one. There's some people in the chat. It's not refreshing. I'm hardwired here. See the Wi-Fi. That's how cypherpunk I am. It's really slow internet on the Wi-Fi. Hence the hardwire in. But yeah, what I hear constantly is the drop gold thing, and I hear the same thing from Peter Schiff, always constantly slagging Bitcoin, and I just think, man, what's as if you can't see the value in Bitcoin. Like, you're not that dumb. I really looked up to Peter Schiff for a long time. He's and his father, Erwin Schiff. So amazing guy, very switched on. But for him to put this nonsense out there that Bitcoin is just totally worthless and a tulip bubble and all the rest of it, and then for Barry Silver to also say that drop gold, Bitcoin. I just think it's such a ridiculous argument that I find it kind of offensive to their intellect that they would bring that sort of argument up. I don't know how you guys feel about that. Let us know in the comments. I think it's one of these things that in one way you can think, oh yeah, drop gold, we've got now Bitcoin, but Bitcoin's very young. We're here at 12 years old, and that's why we really should not, we should have respect for a money that's been around for 3,000, 4,000 years. Some say 6,000, but I'm not sure. But a long time, nevertheless, and held its value. And the other amazing thing about gold is that it's independently in different countries being valued. So some strange country in the middle of the Pacific would also find gold to be absolutely worth a lot and use it in trade. And then on the other side of the world, with zero contact, they'd be doing the same, like the Incas or something. So it's one of these amazing metals, and it's not only that for no reason. Gold has it can't rust, so you can throw it in the ocean, and 100 years later bring it out, and it's still the same. Like I mentioned before, it's divisible. It conducts electricity very well, so that's good in the modern world. It's beautiful. That doesn't hurt. It's malleable, so you can make it into things. So all of these things, and it can flatten really, like you can get it very, very extremely thin, which is also very useful. So there's so many reasons why gold has value and will continue to have value. The other thing that people constantly bring up against gold is that, oh, well, they're just going to send a rocket into space and start mining an asteroid that's just full of gold. And yeah, sounds doable, but try getting that gold back to Earth. It's heavy stuff, guys. It's really hard. I don't know if you've held it's unusually weird to pick up because it's so heavy. You're like, whoa, it's such a small amount. And it feels really strange. I don't know if you've ever picked up lead as well. It's just a strange feeling holding such heavy metals. But if you try to re-enter, it would just take you so long to bring a lot of gold back safely to Earth without it burning up, just, throwing it down through the atmosphere. So I'm not, unless they use that gold in out of space, unless they use it on space stations and stuff like that. But maybe then the value of gold on a space station has less value than on Earth. I'm not sure, but these are the sorts of things that constantly come up about why gold could lose its value, and it's right. That's why Bitcoin is actually the rarest thing on the planet, because there is a mathematical certainty of its scarcity. Vlad, you're back.
Yeah, I actually had to run because I live at the last floor in a building with no elevator.
Oh man, that's tough. Well done. How many
Okay,
floors?
so what did I miss?
Well, I was just talking about a lot of the similar things of Bitcoin and gold is that they're mined into existence. It's divisible, and so is gold. Gold is divisible down to the theoretical atomic level because it's gold. It's a base metal. It's all the way down. It's not and so you can, but it's very heavy. It's hard to verify gold. Where Bitcoin is very light. It weighs nothing, and it's digitally native. It's very easy to verify. So it's the same but opposite. And by combining the two, by using both of them, I think it works very, very well as a money. And this is where it goes against the whole nonsense that Barry Silver with the Grayscale Ventures and stuff was against gold. And it's the same nonsense as well that Peter Schiff is constantly going on. And I feel like those two have used that conflict for their own self-interest rather than actually believing it, because they're both very intelligent people. And I just cannot believe that they don't see the value in each asset class.
Do you believe that Peter Schiff actually gets Bitcoin and might have a stash? Because he acquired an interest very early on and spoke about it and was a critic of it, and has maintained his stance on Bitcoin even if the price did not do what he predicted. And I think sometimes that he discovered some sort of engagement cheat code on Twitter, because whenever he tweets something negative about Bitcoin, he knows he's going to get engagement.
Exactly spot on. And I really don't know if he has Bitcoin. I presume he would. But I also think that maybe he has such hardcore cognitive dissonance with himself that he has convinced himself not to be convinced, because he spent so much energy and time fighting against it, that if he was to be convinced, he would be very embarrassed of himself. And so this is the typical in psychology called cognitive dissonance. It's why people can't change their mind very easily, because they've invested too much time into a certain concept. And so I think maybe he suffers from that so hard that he refuses to change his mind. But nevertheless, it's just idiotic for both sides to be fighting when really the real enemy is fiat, is this ridiculous central banking nonsense, and where he is squabbling amongst each other. And this is actually where I also stand with Eric Voorhees on the fact that I also don't care about all the shit coins out there. I don't, a lot of people call everything a scam, and there is a hell of a lot of like blatant scams. I don't get me wrong, but I'm a competition maximalist. Competition keeps the bastards honest. That's the old Australian saying. The more competition, the better. and the best bubbles to the top or stays at the top in a free market. So by having competition, and Bitcoin is competition to gold in a way, definitely, but at the same time, it's not really. So it's definitely a good thing to diversify amongst rare assets, and I don't see there many altcoins that actually have value at all. It's very slim, but the ones that do, I can understand diversifying into a couple of them. But in terms of diversifying between physical rare assets and digital scarce assets, is definitely something that everyone should be doing, or should look into doing. This isn't financial advice, people. I'm just this is for educational purposes only.
All right. So how do you start with buying gold? What do you do? You go to a gold and silver pawn shop or something and you buy some gold?
Yeah, I mean, there's a bunch of gold dealers nowadays that accept Bitcoin. So if you want it physically to have at home, to cuddle at home, I'm not the biggest fan of holding gold at home because, for instance, insurance. If you try to insure gold at home, it's very expensive. And insurance does one thing very well: it prices risk. Insurance companies are the best function we have to pricing risk. And why is gold almost sometimes it's so expensive that insurers just don't even offer it, because they know how risky it is to hold gold at home. People get robbed, their family rob them, their friends rob them, or information leaks out to friends of friends, to strangers that ended up robbing them. So the other thing is, when you take gold home, it loses a lot of premium, because the gold dealer, when you try to sell it back, has to then check if it's real, and that goes back to the verification process. There's a lot of good techniques these days where you can send beams through and stuff like that through the gold, radio and all sorts of things through gold, and electricity, check the Doppler effect and all this sort of stuff. But yeah, it loses value when you take that, because they need to go through these processes to prove that it's purity. And so my recommendation is always to have a good allocated gold vault that is super secure, professional, top tier vaulting facilities in a good jurisdiction. So check your jurisdictions as well, folks. Don't buy in like Hong Kong allocated assets, because China's very close, plus it's not the most reputable. Singapore's okay. I'm not the biggest fan of Singapore. I think it's not too bad. My favorite is Switzerland, because Switzerland has been through 2 major world war conflicts and stayed pretty neutral through both of them. They've held on to private property law very strongly through those times, and they have a lot of gold smelters there as well, and the market is huge, so the liquidity is quite good there. The good thing with allocated assets, the allocated means it's in your name as your property, so stick with allocated assets. Don't do ETFs. ETFs are ridiculous because they're just IOUs for gold. For the main ETF is the GLD. It's owned by HSBC, who have the gold on their books as under their property, but they give you access to that through an ETF. But if they go broke, they could bail themselves out with that gold. So make sure to have allocated gold. It's in your name. It's your physical good. It's just you have it under what's called a bailment contract, which means you have it stored by someone, secured by someone else. They don't own it. They're just looking after it. And make sure that they're transparent, and you can go visit the vault and stuff like that. That's really important. So they're my little tips for gold.
Would you say that it's more difficult to secure gold than it is to secure Bitcoins?
That's a tough one. I mean, I would say no. Gold is hard to secure by yourself. You have to have a solid hiding spot / secure hiding spot. Again, insure it. Bitcoin is hard to insure because it's so new still. There are insurance companies that are starting to insure it, but it is tricky. Bitcoin is getting easier. It was harder to secure for some people, but it also depends on where you are in the technocratic scale. Where are you? Are you, a full-on person that's really into technology? Then you'll understand the intricacies of public-private key pairs and how hard they are to keep, and how easy they are to lose or screw up. The thing is about cryptography is that you want to make it hard enough for anyone else to crack, but easy for you to remember how to open it again. And a lot of people I know, or I've read about through the years, have basically forgotten how they encrypted their own private keys. And it's so unfortunate and sad when that happens. But there are better and better ways of securing Bitcoin. Trezor and have done such a great job. I really like those guys. They've been around forever. Invented by the guy that invented the pool, the mining pool. These people, Slush down there. I mean, really a great way to secure Bitcoin and crypto assets is through a hardware wallet, definitely. But the easiest way to secure Bitcoin is to print out a paper wallet. I say easy, but it's actually not, because you want to get a brand new machine that never touches the internet and insert a bit of open source code that all it does is generate private public key pairs and then send your Bitcoin to that. So, and then print that out, destroy the computer. I mean, there's so many levels of securing Bitcoin. So it depends how far you want to go.
Oh, yeah. And it's interesting that you mentioned Slush and Trezor, because I've had him and all of the other major figures in the hardware wallet industry in season 4 of this podcast. And it seems like Trezor is struggling to have good marketing in this space, because there are newer companies that came along and they are flashier. They promise new features. They add secure element chips and all of that stuff that actually can't really be verified, and they don't rely on open source code, just like the components inside a Trezor, which I guess you can acquire to build your own. And it's always interesting to see that OGs, regardless of this new wave of more complex and sophisticated devices, recommend the Trezor.
Yeah. I mean, they've stood the test of time. I think this is like anything with the hardware, is they stand the test of time, because any of these things in the system are get better with every sort of breach. And I mean, as far as I know, Trezor, they've had a couple of security things where some security researchers have figured out some way, if you get access to the hardware, you can do this and that. But over time, they've gotten so good that it's just such a beautiful piece of hardware. And they've never had a mass breach that's easy to, nothing like that. It's always been very well, very, very systematically made better and better. And I find that hardware wallets, they didn't only create a really good hardware wallet, they pioneered some really great things. For instance, having a fake account, like multiple accounts. So if you do get the wrench attack, which is the cheapest Bitcoin attack, which is basically someone coming up to you with a wrench and smacking you over the head. To get around that is you say, okay, here's my wallet, and you give it to them, and it's you give them the number for the wallet with smaller amounts on there. So that was a really great pioneering thing to add to a hardware wallet. And I know it sounds like an easy thing to think of, but at the time when you're pioneering stuff, this is all new, So it's and they're great guys.
Yeah, they are. Actually, right now I write some articles for them sometimes.
Yeah.
And last week I did a tutorial on how to use your web wallet with your Trezor web wallet with Tor browser, which I think is one of the best ways to use it because privacy is important when you deal with Bitcoin.
Yeah. Yeah, no, absolutely it is. Absolutely. I'll have to check out that article. That sounds great.
Yeah. So I really appreciate that people who got into Bitcoin in the early days actually say that Trezor is great and recommend it in spite of its flaws. And what I like about Trezor, by the way, and the reason why I chose to work for them is that they're so honest and open about everything.
Mm,
If they get hacked, they mention it and they fix it.
mm.
It's not like they do a sort of marketing and PR stunt and they try to cover it up and say, we are trying to do damage control and minimize the impact of this. They are open about it. They say, okay, you found this flaw. We can even pay you a bounty if you report it to us.
Yeah.
And we're going to fix it. And this is the spirit of open source software. When somebody
Yeah.
finds a flaw, you fix it and you deploy an update, and that goes on.
Yeah, absolutely. And I mean, I've got to take my hat off to people in the hardware space in general in Bitcoin, because in 2017 they had to scale up their teams. I mean, we in the software world, we run an exchange in the software world. It's hard enough to deal with like an onslaught of traffic all of a sudden and trying to scale it and DDoS and all the rest of the stuff that comes along with that. In the hardware space, you need to scale up uh, a lot of things, to get the amount of units out there to the demand that's all of a sudden coming. And 2017, at the end of 2017, when that crash happened, demand just dried up across the board, the software and the exchanges on the hardware. And hardware, I mean, I could just imagine how hard it is when you've got people pumping out bits of hardware. You got huge amounts of, factory lines. You got all sorts of stuff going on, and to deal with that sort of shock, which Bitcoin happens to have during this price discovery phase of Bitcoin's life, where it's trying to find a fair value. You get these huge booms, these moonshots, and then these crashes, and to try to ride that out as a hardware company is extremely hard. So I take my hat off to those guys for riding them out and managing to run a really solid business.
Yeah. And I was about to ask you a question, which I usually ask to my guests, because in this space, we say don't trust, verify.
Yeah.
But unless you are very technical and you can actually verify every line of code that goes into your computer, you actually have to trust someone who audits the code.
Yeah.
And who do you think are the right people to trust in this space? Or who do you trust?
Yeah, that's a really good question. I mean, I've always liked Peter Todd because he's always like never cared what people thought, and he goes out there and tries to break stuff all the time, and was always very unpopular because he would like point out flaws, and everyone's like, oh, you're bringing down the price, man. But really, it wasn't about that for him. It was about making good, secure software. So I really, appreciate his work in this field for a very long time. But I you know, I like to see things kind of like when you're on Amazon. You don't want to trust one person's review because they could just be an angry person that reviews shit and just is angry and You want to look at how many people have downloaded this, how many people are verifying it. Go onto GitHub, have a look at their code review system, have a look at how many people are adding code. It's for me in this field, for instance, that question was very, very relevant in the early days when it came to the paper wallet that was made open source. And I've forgotten the guy who made it. He was on a podcast on the Let's Talk Bitcoin podcast years ago, but he created this paper wallet generator. And it was always like, do we trust this paper wallet generator? And you could read the code, but I couldn't read the code. I'm not a coder, but people could. And really it's about seeing, okay, 50 people, 40 people verified the code and all said, yeah, it was good. If it was one person verifying the code, I'd be like, yeah, could be a mate of his, So just like on Amazon or eBay or anywhere else, you want to have as many reviews as possible because someone's going to raise a red flag if there's something sketchy.
I agree, but isn't this counterintuitive? Because in software, we like to think that the latest new release is the one that's best, and we update our mobile phone operating systems instantly because we assume that what is the newest is also best. And with Bitcoin, actually, it's security that matters the most, and you need the most stable and the most tested implementation. But you don't know that when you first get in. You think that whatever claims to be the new Bitcoin and claims to improve on Bitcoin is automatically an improvement, even if it's not.
Yeah, no, that's very true. And that's why SegWit adoption is still so slow. I mean, it's where we're like, I don't know where we are now, but because a lot of businesses, they don't want to just chuck the latest version of the core on their system, or the QT or whatever you want to call it, onto their system, is because there might be a flaw. And for instance, WordPress just came out with their new WordPress, and they've made a new function, a new feature all of a sudden, where you can switch on that every plugin automatically updates. And I just think, what? Why would you ever turn on that switch? Because it basically gives anyone the right to hack every single WordPress that's out there that's got that plugin, because they could just say, I'm sick of this. And they just write a dodgy bit of code and push it, and it'll push out to every single person that's got that. So, I'm not a big fan of, I'm an early adopter in most technologies, but when it comes to upgrading software, I generally, in terms of security, it depends how security, of course. If it's just, the firmware for this microphone, I won't think too much about it. But even that could be some sort of injection. It's funny, actually. I remember back in the early days, I would stop downloading any wares because I started getting really paranoid. I was thinking, man, Bitcoin is really good for like Adobe and stuff, because I've ended up buying all of that suite. And back in the early days when I was a student, you just get cracks for that sort of stuff because you want to learn. And just, this was how stuff back in the 90s is how you did stuff. But when Bitcoin came along, you just didn't want a dodgy, weird key gen on your computer. Like, who would want that? So it's I think it would legitimize a lot of software out there. I mean, people start buying it and paying for software because they don't want sketchy key gens.
Until not so long ago. So I think 5 years ago, I updated to Windows 10 when it came out. So on day one, I was like, okay, so I'm using 7 and I get a free upgrade to Windows 10. Oh my God, this is the best gift ever. I should do it because, 10 is a larger number than 7. So it should be better, right?
Yeah. Yeah. And in great, Microsoft logic, they just skip 8, 9.
Yeah, they had 8, but it
did they
was
have
sort
8?
of a hybrid with tablets and PCs.
Right. Oh, yeah, that's right. Yeah, that's right. It was a weird hybrid thing. No one knew. Everyone was pissed off because they pressed that Windows button and something new. Yeah. Yeah. No, especially operating systems, hold off on upgrading that stuff for at least a couple of months. Let other people find those potholes.
Yeah, so if there's anything that we should educate newbies on, it should be not to install updates, especially with mobile wallets. Like you get an update for Mycelium or something.
Yeah.
And I know Leo from Mycelium. I know that he probably wouldn't do something malevolent. So that's just one example. But when you have a mobile wallet, you probably should not update unless you, I don't know, do something like a reset. So there is no way that the data can be sent. I mean, they still have your XPub, right? So unless you run your full node, they have your XPub. So there's nothing really that you can do. But they can do more to add keygens, keyloggers, not keygens, keyloggers. And I suppose, what's the name of that wallet that had some sort of keylogger which stole funds?
Oh man, I'm not sure, but yeah, I remember hearing something. There was also I think it was like Koinomi or something had something that was like
Yeah, Koinami. So it
yeah,
had something like Google autofill.
yeah. So it would remember, it would keep the clipboard would be, yeah, there was something like that. But there's also like on Apple products, they've got this universal clipboard. So if you copy something on your phone and you can paste on your PC, on your Mac. So these sort of universal clipboards also be very, very careful with that sort of stuff, because all of a sudden you're sending private keys around who knows where. Yeah, yeah. I mean, for newbies, I think the biggest thing is write down your seed very, very well. Don't think that you'll remember it. I would also cut the seed in half and put one somewhere and one there somewhere else, and do that twice in different places, so that you have two copies, and they're, if someone finds one, they don't have the whole picture there. Also use a Ziploc bag if you're using paper wallets or even hardware wallets. Ziploc bag for the seeds, so this protects from water. Trezor also has a really good metal hardware thing for seeds, which is really great against fire, because fire sucks. But this is, again, if you're going to use paper, definitely have two copies in multiple places. It's unlikely that if one house burns, the other one's, unless you're living under a volcano or something. There we go. Bit for Foddle. Nice.
I actually have one of these. I have yet to
Wow.
do some sort of unboxing video.
Yeah.
For most use cases, I think it's overkill to use these. But if you live in a place that can be flooded or can get into some sort of fire, I suppose it's useful to have one of these. And I'm not sure if you followed the additions that have been made to the Trezor Model T hardware wallet. Last year, they added the Shamir backup.
Oh no, I'm not sure. I'm not
So
aware.
it's based on Shamir's secret sharing. I
Uh-huh.
actually did a video on that, so that's why I know. And it's like a mixed hybrid between a multi-sig and a single simple wallet. And
Wow.
instead of having just that seed phrase of 12 or 24 words, you have as many parts as you want, up to 20. So let's say you do a 2 out of 3,
Mm-hmm.
and it generates 20 words or 33 words, depending on how many you want, 20 words for each share. And you're going to require a certain threshold for you to recover the wallet. So let's say you do a 2 out of 3, and your private key gets split and gets divided in these Shamir backup words. And you have 3 different pieces of paper that maybe you take one to your bank safe, you take one to your lawyer, and you keep one to yourself to make sure that your funds are not spendable, or in the event of a $5 wrench attack, there's nothing really to steal from you because you have that share that cannot be used for anything. You need a second one at least to be able to recover the private key.
Nice.
So this works like a multi-sig, except that it doesn't require multiple signatures. It just requires a Trezor Model T or their Python software that you can download. That's something else that I like about Trezor, because they thought about the event in which they disappear from the market and they might be obsolete or something, but you can still download the software. It's open source. It will possibly live forever and outlive them as a company.
Yeah, that's
So
great. Yeah.
if you do a cold backup and you keep it for 10 years and Trezor goes out of business, you can still run their code and build everything from scratch so that you recover your funds and you have all of these features.
Amazing.
And I mentioned the Shamir backup because you can do 20 words and you get like 3 of these for a 2 out of 3 backup. And you keep 3 metal plates in different places. And that's, a very paranoid level of security, but something that I want to experiment with. I want to try.
Yeah. Yeah. That was very cool. Very, very cool. Yeah, this is what I'm talking about with those guys. They're always innovating. So it's great. Yeah. Yeah. So yeah, I mean Bitcoin's always been one of these things where there's there's a heap of levels of security, and the hard thing is when a newbie comes along and goes, how do I secure my Bitcoin? And they'll get some post with like ridiculous steps of like, buy yourself a cheap brand new laptop that's like never seen the internet, and then and it's just this epic list of how to secure. And it's like, yeah, that's totally secure, like that's the most secure way to go. But then there's also like less secure ways to go, but that are probably fine. And a lot of people that just getting into Bitcoin should probably first start off with the easy version and not have their life savings on it, and play around, try to understand it first, and it's always so that risk appetite that they've got, and solve it. But I just want to quickly add with the 22 words, or the a lot of people think, oh, 22 words, it doesn't sound too hard to hack. But 22 words is so epic in the amount of entropy that has, like the amount of possibilities, sorry, that has, because there's for example, there's a great website where this guy got sick and tired of remembering addresses, so he split the entire globe up into 3 by 3 meter cubes. So you can go onto Google Maps, and they've got like he's split up he's put a grid over the entire world, and each grid 3 by 3 meter block has 3 words. So you can type in 3 words, and it'll find that block that 3 words belong. That's only 3 words can fill the entire globe with 3 by 3 meter blocks. That's only 3 words. Think about like 22 words. That's more. I think it was something I remember reading. It was like, if you take every single grain of sand on the earth and multiplied it by every single grain of sand on the earth, that's how many possibilities there are, or something like that. So it's extremely improbable that it'll ever be cracked, even with quantum, I think. Yeah.
What I read is that it requires the entire energy of the sun and possibly much more in terms of consumption to crack the cryptography of SHA-256, because I suppose that's what guarantees the security of this system. But it's definitely hard.
Yeah. Yeah, it's definitely hard. It's definitely hard. Yeah, if anyone knows what the name of that website was where it splits the world up, I'd love to. I've totally forgotten what it's called. But it was a really great concept. I really liked it. So you just set your addresses like tiles, table, light, and that would be your address, Forget the big numbers and apartment numbers and street names.
Yeah, it happens. And earlier, when you mentioned someone who had a website which was helping you generate a new wallet, it was not from Mike Caldwell, the guy with Casacius, right?
Yeah. No, not Casacius. No, it wasn't Casacius. It was. I think you could just put Bitcoin paper wallet. Let's see here.
Anyway, Peter Todd told me that it's a bad idea to use it, so I would never.
Bitcoinpaperwallet.com. Yeah, I think that was Bitcoin Paper Wallet. No, the bitcoinpaperwallet.com guy, he used the library that's on GitHub, but it hasn't really changed much. Yeah, but like I said, if Peter Todd says no, then probably don't do it. Yeah.
It's incredible. If there is one person that I trust with security, it's Peter Todd and possibly Greg Maxwell, even if he is more reclusive and he expresses his opinions less directly than Peter Todd. So he tends to be much nicer and diplomatic than Peter Todd, who's like, nah, that's terrible. That's a scam. It sucks. I wouldn't touch it.
Yeah, Peter, he
But
doesn't hold back.
yeah, exactly. And that's why I like him,
Yeah,
because
same.
he's honest. I
Yeah,
mean, I perceive him as being honest, and I don't see what kind of incentives he might have to lie to us. He's not
yeah,
selling anything. He's not offering any kind of service except for maybe his consultancy.
yeah. No, and Pete's, like Peter, he's been around so long. Um, Even in the cypherpunks, is like 13 years old. He was being asked questions like what 13-year-old kid is thinking about decentralized mechanisms of creating digital currency? It's phenomenal. But yeah, like I said before, what I really liked is even in the beginning when there was really only Bitcoin, um, and people were, still had the same mentality of wanting the price to go up. They didn't want to hear bad news at all. And Peter would just say, no, this is broken here, blah, blah, blah. This is not right. And of course, the people committing to the Bitcoin GitHub were then listening and changing code.
Yeah, but Peter was also wrong a few times. And it's not just a few. He proposed his own implementation of a second layer,
Yeah,
like Lightning, but he can admit personally that it was much worse than Lightning. And he had quite a few ideas that did not work out the way he thought they would.
yeah,
But at the same time, he's critical enough to point out the flaws in anything. So I
yeah,
think that's the value in his input, that he can find the problem with anything.
yeah. Yeah, I mean, at the end of the day, people are human. Everyone's human and all make mistakes. We're not perfect. And this is why I think it's so beautiful that Satoshi just disappeared, because if he didn't, people would point out his flaws and attach that to the protocol, which can't be done now. I mean, Jesus, if everyone pointed out, like, if that's why it's just so terrible to think that Craig Wright Satoshi. If it'd be like, no, please don't be Satoshi, not that idiot. Yeah. But yeah, that's why I really like that Satoshi disappeared, is that people are flawed, and just like Peter Todd, he's also a flawed individual. Not everyone's perfect.
Oh yeah, he could be Satoshi, right?
Could well be, could well be.
Yeah, very unlikely, but he could, because he has all of the knowledge. And I'm not sure if actually, I think he's a better coder than Satoshi was. So, no, he can be.
Yeah, I mean, the funny thing, I mean, I've heard Peter as well back in a long time ago say, I was so close. I just didn't see that last piece of the puzzle. And he's right. I mean, a lot of the cypherpunks in that mailing list really had all the pieces. All the pieces were there. They just didn't put it together right. They didn't. The poem, all the words were there. It just took Satoshi to write the right poem and make it all fit together.
Yep. But what I like about cypherpunks is that they are collaborative, in the sense that I don't see much jealousy going around. If somebody has a better idea and a better software to solve a problem, they just use that instead of, you know, taking it to their ego and saying, I'm going to continue with this.
Yeah. Yeah, that's the sign of a good scientist, isn't it? I mean, a good scientist should lie on their deathbed and be thankful that someone's just destroyed their life's work with a new theory that actually makes more sense and gets null and void the life work of the scientist lying on his deathbed. Because the whole point of science is to move forward, is to find truth and empirical truth. And so this is the biggest problem in a lot of ways, is that a lot of scientists they get this sort of cognitive dissonance because they've invested so much time and effort or money into a certain concept, and they get really angry and egotistical about about their solution.
That's why Craig Wright disqualifies himself as being Satoshi, just because
Absolutely.
he would never collaborate on anything. And if you read any Satoshi blog post from bitcointalk.org, you're going to see a very nice person who explains to any newbie how Bitcoin works and what it's supposed to do.
Yeah.
He spends so much time just explaining to people how it works.
Yeah.
And that's not something that Craig Wright would have ever done.
Yeah. Although he did get pissed off at Dan Larimer for going on about delegated proof of work and that he doesn't have time to explain if he doesn't get it. Something like that.
And it worked, I guess. Dan
Yeah.
Larimer designed at least 3 projects that he
Yeah.
abandoned
Yeah.
and
Yeah.
used his ideas, which proved to be flawed. So Satoshi was, in a sense, right. But I don't recall him saying that Dan Larimer was wrong, just that Bitcoin can do it. That I think that's
Yeah.
the subject of that
Yeah. Yeah.
discussion between them.
Yeah. Yeah. You're right. You're right. I mean, it's really interesting watching that play out, and this is why I love. That's why I said before I'm a competition maximalist, because it's great that Dan tried it out properly. Try it out. Let's see. And as we can see now, these block producers are voted in with this delegation process, and they're all voting each other in. It's not working because they're basically it's collecting into a centralization of large players made up of conglomerates and exchanges, all that know each other in China and can send each other emails and be friends and take each other out for drinks and say, "Hey, upvote me." So it's ridiculous. Voting is something that's really should be one CPU, one vote. I mean, it hasn't turned out fully like that, but yeah, the actual process of voting with coins and I think proof of stake is still is better than delegated proof of stake. I think delegated proof of stake ridiculous, but proof of work is the best.
Ideologically, I'm not sure if I like proof of stake just
Yeah,
because it makes sure that the rich will always be
yeah,
at the top.
yeah.
So if
That's
you
right.
get in on the first day and you have one of the largest holdings of that coin, you're going to always be that rich
Yep,
by
yep,
doing nothing.
yep. Absolutely. It really solidifies that rent seeker nonsense that we definitely don't want. Yeah, no, you're right. I mean, but in a way, um, you still need to be fairly rich now to compete in the proof of work algos. So, if you wanted to mine Bitcoin and compete, you really do already have to be quite wealthy to even start. I mean, that is arguable in terms of, well, if you're, not as rich, you can buy smaller and you get smaller back. That's fair enough too, I guess.
I
I
still
think,
hope that at some point in the future, we're going to have mining that gets re-decentralized at some point, and
yeah,
every user runs a mining rig just like Satoshi intended. But that will only happen if this industrial scale of mining becomes unprofitable and the holders are going to mine just because they understand it's important to support the security of the system.
yeah, I, I think it could happen in multiple ways. I have thought about this quite a bit, and one of the solutions I think would be probably really good is if, especially the hardware manufacturing becomes so cheap that it's cheaper to buy a USB stick that mines or whatever, a miner, and you sell it as a lottery ticket, and it's almost solo mines, like it just solo mines. It doesn't even pull, and but the chances are probably still better than a lottery. Because maybe the chances are better than a lottery. I'm not sure, but nevertheless, you sort of just run it, and hey, you might win. What is it? 12? No, we just had the halvening, so you might win some Bitcoin, but it's very, very unlikely. But maybe you will. Or the whole concept of using it to heat your home. I bought a pretty powerful computer to mine with, but but really I wanted the computer for VR, but to sell it to myself, I was like, oh man, I don't want to spend all this money. I don't have money. Should I, I can write it off as a heating expense. I can turn down my heaters and have this computer running to heat. And I think I'm seeing this more and more where people actually building heaters made out of ASICs, and they can heat their home with that. It's a great idea. So, does your heater pay you? I'm not sure.
There are lots of ways, and there's lots of innovation still to be made in this space. I guess that's why I still find it exciting. And I like to joke that once Bitcoin becomes mainstream, I'm gonna have to find a new, obscure rabbit hole in this world to consume my time.
Yeah, definitely.
So thank you very much, Joshua. I think as a last question, I should allow you to promote Vaultoro and tell people how they can find you, how they can sign up, why they should sign up, and why they should consider both gold and Bitcoin.
I think I've explained it a lot, and people should just be wary. Don't leave coins on exchanges. If you're going to use an exchange, go on there, trade, and take the rest of the coins off. Vaultoro, we've been around since 2015. We're just about to re-implement the Glassbooks protocol after this rewrite. There's some good stuff, but check out Vaultoro anyway, see what you think, tell your friends. You can follow me on Twitter at Scigala, that's JSCIGALA. And I blab my crap all over the internet over there. If you've got any tips, any metals or any coins that you would like to trade on Vaultoro against gold, let us know either on Twitter or through the support channels. And hope to see you around.
I'll see you around, and possibly, I don't know, we spoke in the beginning if you'd be interesting to talk about video games and music in season 7. Maybe we can do that.
Yeah, I'd love to, Vlad. I'd love to, man. It's been great.
Okay, so thank you very much for your time. Sorry for that time when I had to go and get back, and I missed part of your explanation. So I'm going to have to listen to this again. But I will listen to it anyway because I put it on Spotify and Apple Podcasts, and I do some enhancements to the audio. So
nice.
That's a good reason.
Yeah,
I add some compression, I add some reverb just to make it sound nicer, give it that radio quality.
Very good. I love it. I love it. Well, I'll make sure to subscribe on Spotify.
Okay, thank you very much.
Awesome.
And
thanks, Vlad.
Best of luck with Bitcoin and gold at Vaultoro.
Thanks, mate.
Okay, so I ended the stream.